Hello and welcome to another video on my YouTube channel. My name is Joris and it's been a while since I made an update, and it's 2 weeks ago that I gave my update on my Yuh-portfolio, and about 2 weeks ago and 2 days ago that I made an update on our ETF portfolio. And in the meantime the Iranian war started, and yeah, I'm really busy at my work, so I didn't make a lot of videos. I just made a bunch of shorts in the 2 weeks ago. Last week I really didn't have time, so sorry for that. But you see, in the meantime our portfolio lost about 2%. It was deeper, you will see that in a few minutes. And my Yuh-portfolio lost minus 3.65%. So the Iranian war, it has an influence, but so far it's been reasonable. We can't complain at all. But this video is about what matters, or on what we need to focus as normal investors. And for me, a normal investor is actually somebody who has an emergency fund, and that emergency fund is normally not for investing. I think it's normally not wise to use your emergency fund to take money from it and put it into the market when the market is tanking. And now for me, the market isn't really tanking. It's just a small dip. It's not a crash at all. Some stocks are, yeah, falling a lot, but are those stocks really on your buy list? Yes or no? It all depends, and it all depends on how much you earn and how much you can, or how fast you can restock your emergency fund. But for my wife and I know we can't actually do it. So 3 years ago I made a mistake, and I'm not going to make that again. I'm not going to invest too much money into the stock market. I'm going to stick to our budget and just invest normal amounts every month. So if you can save and invest on a weekly or monthly basis a certain amount, you're a normal investor. If you have to wait until your wage hits your account, then you are a normal investor, just like me. And when you just can do the normal continuous cost averaging, so yeah, just invest every month or every week, you are a normal investor. And what do normal investors do not? Well, we do not rush in with money from our emergency fund to buy the dip. And as I said, it's not a crash, although there are some shares that really moved a lot. If they were not on your buying list, don't touch them because you didn't do the research. And we do not follow panic news and start panic selling. On GetQueen, there were a lot of posts of people that said, oh, it's going to crash, it's going to go down 10, 20%, even one guy said 70%. That's totally bogus. That's incredibly stupid to do such statements. But yeah, it's the internet, so you can say what you want. You're behind the screen. I'm now behind the screen as well. I don't show my face because my camera is yeah, it's a camera of a computer of 13 years old, so it's not really good, and my face doesn't bring any, yeah, how do you say it, surplus to my content. So if you can, yeah, you can look me up on some videos of me. You can see my full name, so that's a nice thing. Go and watch my old videos and try to find my old name and then look up my picture. I'm not that pretty, so no problem at all. And we do not sell Shell. Just because it moved up in the past month a lot, I'm not going to sell Shell. I like the company. Okay, it's up 20% in the past month, but for me it's worth more, and the dividends keep on coming in. And it's really nice that Shell is in our portfolio, so it counters the movement of other stocks. So that is why you diversify. So let's go and look at how it is going on the stock market. So I'm going to go to Yahoo Finance and my GetQueen account. So this I didn't need to. I went to my Swiss quote account to watch how my portfolio was doing, and it wasn't that great, but that's okay. It's going to go up one day, maybe in 1 year, maybe in 2 years, maybe in 1 week. You never know. That's the stock market. So I'm going to go from the fourth biggest stock to the least biggest stock in my Yuh-portfolio. Then I'm going to deal with the last, so actually the first three stocks in my portfolio, and that is Shell, then Nestle, and then AXA. And then I'm going to go over my portfolio, my Yuh-portfolio, and the ETF portfolio. So here you can see Volkswagen. It's the war actually started between the 27th of February when I made my ETF portfolio update, and on the 1st of March when I did my update on my Yuh-portfolio. And you can see that most of the shares will be on the highest point on the 27th. For Volkswagen, it's different because they were anticipating bad numbers, but still the earnings per share it's 13.29, I think. So they didn't adjust it yet, but there wasn't a big difference compared to what was already on Yahoo Finance. And still the stock, after they announced the results, which were no big surprise, it started moving down. And for me, it's now on my buying list for sure. I bought it at 106 the last time I bought it, and now it's back to around 89.50. So I'm for sure looking at buying into Volkswagen next time. Then we can go to BKW. Yeah, here you can see it went from here to there. So it moved down and then it recovered. So BKW, great stock, nothing to complain about. The last buy, I'm up even compared to my last buy, and it's about what my average worth is, my average buying price. So I can't complain about BKW at all. Then BASF, it's from here, it's more or less stable. So once again, BASF, nothing to complain about. DHL, that one moved down from about 50 euros to 45 euros, so about 10%. So that's a big movement, but still, yeah, the PE is 14.70, so it's more or less buyable, and maybe it's going to come on my buying list. It has to do with how Volkswagen is going to evolve and how Bayer is going to evolve. Then we have Anheuser-Busch. So after the results, it moved up a lot. And then since the war started, yeah, it just came down, and now it's about 6% lower than at its highest point, and that was just before the war started. So I'm still up big time on AB InBev, and I'm not complaining at all. You know that under 54 I find AB InBev always buyable, and now it's at about 63.5 and above. So yeah, it's still for me it's still good. You can only look at this period and say, hey, I don't like it that it's going down, but just increase it and look at where it is compared to 6 months ago. So yeah, just incredible how it went up, and the Iranian war isn't going to influence the results of Anheuser-Busch big time. So nothing to complain once again. Logitech, in the past month, it is actually moving up, but that one was punished a lot after yeah, actually, why was it suddenly going down like crazy? I still don't understand completely. You had the tariffs that changed a bit, but they were cancelled and not cancelled, so it's a bit annoying why it came down. But if you look at this number here, so you can see here price book value is 5.89. Maybe it's because of that. So when you look at that value, that's not a great number to look at. You have other shares that are way cheaper than Logitech. Then you have Swiss Re. So I bought that one at about 125 Swiss francs, and yeah, now it's on 130. It was at 135 just before the war started, and yeah, it's too bad that it's not at 135 anymore. But on the other hand, yeah, it's an insurance company. They hardly have clients in Iran, so it's not going to have a big influence after all. Then the Swatch Group. Here you can look at the price book is 0.76, so still a great buy in that regard. And if you look at the numbers, it came down about 14-16%. So not a great result for the Swatch Group after the war started. And if you look at this, yeah, it's still moving in the right direction. It's too bad that this bump after the results and the announcement that this year they are all going to perform better, that this news didn't persist. But yeah, news is never going to persist very long. You always have to come with news after news after news, and with Swatch you only have 2 meetings every year, so half yearly results reporting, and then it's normal that there isn't that much anymore for Swatch, and that it keeps up the positive trend with a war happening. Then you have Bayer. Once again, look at here at the value of the price to book 1.46, price to sales 0.83. Incredible value. So Bayer is still on my list, certainly because it dropped again to around the value of 40. Remember in my update video about the Yuh-portfolio, when I was talking about the quadrants, and when I was talking about the quadrants that I make, I said that when Bayer came back down to around 40, for me it was back buyable. So that one is just like Volkswagen and DHL on my buying list to yeah, when my wage gets paid on the 25th. Yeah, I'm certainly going to watch for those three stocks. Then you have Holcim, where yeah, after the war started, it was even coming down more, because when you look at the past 6 months, it was already moving down. Because okay, you have the emission right problem in the European Union. Now voices are turning up that maybe the emission rights need to change completely, because what they suggested lately, which had a negative effect on Holcim, is actually not great for a lot of companies. So not only for Holcim, it's not a great thing how they want to change the rules in the European Union. And so maybe now there is going to come a change. And on the other hand, a war always means destruction, and when there is destruction, it needs to be rebuilt. And when there needs to be something rebuilt, Holcim is always a company that is going to profit from that. Sadly, but true. Then you have ING. So great bank. You know that my uncle works there as a director of some of those banks in Belgium. And I like the bank a lot. And since the war, it came down a lot. And for me, this is a great thing, because when it comes below 10.50 PE ratio, I will for sure am looking to buy more of ING to augment my share into this great bank. Then we have AXA, insurer and bank in France and in the rest of the world, of course, as well, but it's noted on the Paris Stock Exchange. Look at this, price to book 1.76 and the price to sales is 0.81. So incredible numbers. And since the war started, it came down about, how much is it? From 41 to 38, so about 7%. So certainly on my watch list as well. So I have 5 shares which I really want to keep at a low price for the rest of the 9 days, but you never know what is going to happen on the stock market in the coming time. And here you have Nestle. So for the month it is actually slightly down, minus 0.32%, and since the war started it's down about 4%. So it's actually a little bit more, 4.5%. So it's really not that bad how Nestle is reacting on the war in Iran, and why should it? It hardly has any business in Iran, so okay, it has products there, of course, but they are still going to sell those things there as well. When you hear about when DHL, they reported that even though there is a war going on in Iran, they are still maintaining their delivery times because they know how to deal with wars in that region, and they use their different hubs that they have to deal with delivery problems. So really great DHL. It came down. So when you look at it, it came down, but the CEO said it's going to have a really low impact on the numbers, and they are still going to try to get the results that they foresee. So really great news there, and they had great results as well. And then we can go to the last one. Look at this. In the past month, up 19.42%, almost 20% up. And I was buying a lot here in this region. When you look at the past year, I bought a lot here. So it moved up now because the oil prices are moving up. It's a bit of an overreaction of the investors, but for me, it counters the effect of the other stocks coming down. So I'm not complaining at all. And as I said, I'm not going to sell Shell at all. If you look at the numbers here, price to sales is 1 and the price to book value is still 1.45. And enterprise value compared to the revenue is 1.12. So it's an incredibly good company with good value. So why would I sell this if I bought it at a really good price with a good dividend yield, and they are growing their dividend as well year after year after year. So we can go to GetQueen. First, I will go to the Yuh-portfolio. We have the past 1 month. I can go to 1 month here as well. Because I'm still I'm not a premium member of GetQueen, although I like GetQueen a lot, but I don't want to be sponsored by them as well. I want to be independent. I think GetQueen is the best app that you can have as a European investor on the European continent. I tried Snowball Analytics as well, but the currency problem there is really big. It's actually a bit annoying, but because for the rest, Snowball Analytics is a really good app as well. But here you have the community as well, and when I'm on the train and I don't want to read a paper, I take the community and I read, scroll through it. So sometimes I react, and it's always fun to read some ideas of other users. Sometimes it brings joy in my day, and yeah, you just need to check GetQueen out if you want to have a good portfolio tracker. So back to one day view then. Today, a lot of red. I haven't seen it yet actually. So I just opened all the tabs, and I didn't know that it was so red, because I thought here for the day, actually for this day, it was only minus 0.14, but there are actually the top of my portfolio actually went down a lot today, especially Volkswagen. So Volkswagen definitely on top of my buying list together with ING and DHL. So interesting. And Bayer. So that's already four. But yeah, as said, it's it's really unpredictable right now, so a lot of things can change. And if we look at the ETF portfolio, in the past, today it was only down slightly, so oh, actually quite good. And in the past week, it is actually up, because when you look at the past month, so it started here. So in the beginning of the 2nd of March on Monday, it actually moved up in the beginning, the market, and then it started dropping. When the market in the US opened, then it started dropping, and it moved down to 80,705 Swiss francs. So I lost a lot of value, more than 3,110, because it was on the 27th. So I had about 84,700 Swiss francs, or we, my wife and I, had so much on the stock market, and it moved down to 80,700. So we lost 4,000 Swiss francs in a few days. And that's going to happen. And when your portfolio is getting bigger and bigger and bigger, and you are at about 500,000 or 1 million, and it moves down 3%, 4%, you are losing 20, 30, 40, 50,000 Swiss francs in a few days. And you need to get used to that, because it's going to happen. And then you don't need to panic, because it happens as well when you have 1,000 Swiss francs on the stock market, and then it's only 300, 500 Swiss francs that you lose. But in fact, it's the same. It's the same. It's the oh yeah, so yeah, it's 30, 50 for an investment of 1,000 when it moves down 3 or 5%. So, but the percentages stay the same, and you know that the market goes up again, and you keep investing as well. So that amount is going to go up again when the market recovers. So just stick to the plan. And another thing here, when you look at these numbers and you look at my previous video where yeah, I didn't show these numbers, I showed them for the Yuh-portfolio. So let's go to the Yuh-portfolio again. And when you look there, yeah, the numbers, they didn't change. They did not change. This is the power of dividend investing and focusing on increasing your dividends. You don't need to invest into the high dividend yielding stocks, because that can be dangerous. You know that, dividend traps and all that. But when you buy great companies which give also dividends, because they are great companies, they have spare money, they can give it to back to their investors. When you focus on those companies and you keep buying them at great prices, at great PE value, then you will keep increasing your dividend income, and you will see this number go up and up and up. And that is just, yeah, that's just a great feeling, and a great sight to see. When everything is going down, these numbers hardly change. But we can go back now to the presentation, and let's be fair, we saw a drop of 3-5% on average, and that is nothing compared to the profits that we gained in the last 2 months. We were up about 6.8%, and now we lost about 5%, but for the year we were still up 1.82%. So for 2 months, that's actually great. So did we miss out when we weren't able to buy because we didn't have money available 5 days ago when the market was at its lowest? Actually, no, we didn't miss out. It's just a small dip. And okay, when you were the person that had money available at that time and you always invest at that time, you're lucky. And sometimes I will be lucky when investing on the 23rd, the 24th, or the 25th. And sometimes you're going to be lucky when you invest on the 7th, the 8th, or the 9th. It's just like it is. And we as normal investors, we just need to stick to the plan and keep aiming for the long term. The normal plan for normal investors. And as dividend investors, we only feel the influence of the currency fluctuations for now. So when the war really lasts and it expands even, it's going to have bigger influence on the stock market, and then the stock market is going to come down more. But at that time, yeah, we can still buy more, and we just need to stay calm and keep investing. And if other people panic long enough, we can maybe profit even more and buy more shares of what we want to buy anyway. So you have to know that you can't influence the market yourself. So we don't complain when the market is up again, when we can buy again as well. So it can be that in the coming 9 days, the market rises again 3-4%, and we are back at where we were on the 25th of last month. And that's okay, because our portfolio recovered, and the only aim that we have is always try to buy the things that are for us at that time the most reasonable priced, and that is what we are going to continue doing. It doesn't matter whether or not the market is at its highest point or in that moment in time at the lowest point. We just keep continuous cost averaging. So we keep buying monthly and we stick to our plan. For the ETF portfolio, this is going to be GLDV plus LDG. LDG is back up again. So maybe I'm only going to buy GLDV, but LDG is also 3% below its target percentage. So I'm still doubting about that. And for the Yuh-portfolio, Volkswagen and Bayer look the most promising, but we also have DHL and ING and yeah, some others. So we will see, because you never know what is going to happen in the next 9 days. The stock market is always unpredictable. And on the 24th, I'm going to make my quadrant overview, and then I'm going to decide what I'm going to buy on the 25th. So maybe on that day, Volkswagen is back up to 102, and I think, okay, I can't buy it anymore. I'm going to buy Bayer and ING only, or ING is back up to 24.5, 25 euros, and I think, yeah, now it's back up too much, so I can't buy it anymore. It's way above my target PE value at which I can think I can buy it. So yeah, it's for normal investors which don't have a lot of money to spare. It is not that easy, but actually it truly is easy. Keep buying monthly and stick to your plan. And with that being said, thank you for watching to this one. Hope you enjoyed this one. Hit that subscribe button if you like this kind of content. Hit that like button as well. That helps out my channel enormously. And see you on the next one on my YouTube channel. Bye.